Welcome to another episode of the Doctors Building Wealth podcast. Today, Kenji and I wanted to do a mini episode and we wanted to answer a question we get a lot. And that question is, should I use a commercial loan broker? And so here's kind of the situation. If you're buying a property that's a 5-unit or above, that's considered a commercial deal, you have a couple options. You can use a commercial broker, and that is somebody who goes around to different banks locally and probably all across the country and gets different loans for you to review with different terms and different interest rates and kind of shops around for you. Or should I go directly to a local bank, let's say, and work directly with them and get only one loan option?
Yeah, and I think the reason why people ask that question is that a commercial loan broker often has more fees, right? It has at least a 1% loan fee, sometimes a little less if it's a bigger loan. And so that's the real question is that, if I can go to my local lender and they'll give me a loan, why wouldn't I do that versus having somebody go out and shop all these different loans and have to pay them more?
Right, and there's no right answer here. Surprise, surprise. It's this thinking through the upsides and downsides and kind of figuring out what is the right situation for this particular loan, because this can also change over time. So let's talk about the upsides and downsides of working with a commercial loan broker.
Yeah, so I think one of the benefits of working with a commercial loan broker, there are a number, is that one is that they're going to go around and shop for a number of different loan products, and you're going to have a lot of options, and you can pick the one that is best. And the idea really is that if they like your deal, then those lenders are going to be competing for you on that deal. I remember I recently actually refinanced one of our larger deals, and there was a little bit of competition because this was a property with rents that were in the more affordable range, and therefore each lender actually had this requirement that they had to have a certain volume of loans for affordable housing. And so they were actually competing for my business because they needed to fill up their requirement. They had a certain X million dollar requirement and they had not met it. And so they were really wanting our business. And so what was great about that was I was able to get a lower interest rate. And also what was really cool was I was able to qualify for 35-year amortization instead of 30-year amortization. So that actually really lowers my payment.
So what you need to know is there are a lot of different terms you can negotiate with when you're getting a commercial loan, right? You can negotiate, of course, interest rate. You can negotiate duration, like Kenji just mentioned. You can negotiate interest-only periods. You can negotiate costs. There's so many things you can negotiate. And when you have a broker and they went out and they sourced 15 or 20 different options, and they're coming to you, by the way, with expertise. I think that's the other major upside is they've done this a million times before. They know what's broadly available. They already have those relationships with those different banks because they worked with them many times. So they may actually have more pull in those relationships and they're able to maybe even get you better terms. And then they have the expertise to look at those deals with you and be your thought partner and sit there and go through each loan and talk about the different terms and say, this could be good for you in this situation, or maybe you value this more. And they really help you think through it and make the best possible decision, and maybe even avoid some blind spots that you would have had where you didn't think through all the ramifications of a specific loan, and down the road it kind of hit you.
Yeah, and I think that's probably one of the biggest things is that you have a thought partner now. You have somebody who can walk you through those terms and help you think through, is this good or not, right? And which is better for your situation. And so that's one of the benefits. It's it's having a valuable team member who is on your side and helping you think through the risks and help mitigate those risks, right? So that's what we think about in terms of a team. We want to have a really great team, and the better your team, the likelihood is that you're going to lower your risk significantly when you're investing.
Sorry, I want to interrupt there. I want to mention also that, we talked a little, an episode previously about one of the mistakes that we made with one of our loans, right? Where we got the LOI, it all looked good. And then we went and we signed that paperwork without reading it and assuming that the LOI was the same as what terms were delivered. Again, if we had somebody in our corner, perhaps they would have caught it, right? So there's that upside also of having a second set of eyes looking at that paperwork.
Which we did have actually, but unfortunately they missed it as well. And so, but I think the other thing that is really important, as you said, having a really strong team member in your corner especially if you're a new investor, one of the things that most people don't realize is that you're not going to typically qualify for a commercial loan unless you have at least 3 years of experience having a commercial loan in place on a commercial property, right? So that means that you would have had to start investing 3 years prior to getting this loan on another commercial property. And we had this deal recently, it wasn't recently, it was maybe about 3 years ago, where a number of our EV Pro members, our mastermind members, were wanting to buy this property, a commercial property, but none of them qualified. And there were like 6 of them. They all had quite a lot of experience, but none of them had any properties 5 units and above. And so they couldn't qualify for any loans. So we actually jumped in and we ended up being that person, right? The person with experience with 5 units and above. So we helped them qualify for the loan. But there are loan brokers that even if you don't have that experience, they can sometimes go to bat for you. And they can say, this person, I've worked with them or I sat down with them, they know their stuff, and they can kind of go to bat for you and sometimes help you qualify when you don't have that experience.
Yeah, and we had that experience a number of times very early on in our journey where commercial loan brokers kind of went to bat for us and really helped us be able to get loans that maybe we wouldn't have qualified for if it was just us, as an individual going to a bank and saying, hey, trust us and believe us that we're going to be able to manage this property.
I think a couple of the downsides, because we talked a lot about the upsides, are...
one downside we should mention is the cost, right? You mentioned the 1%, which can be negotiated down, but I think that's really the primary downside that you can think about.
Yeah, and I think the cost is probably one of the biggest downsides for sure. But another one that most people don't think about with commercial loan brokers is that if you have a relationship with a community bank or let's say a credit union, you can actually get better terms. And so when you're working with a broker, that doesn't get factored in, right? Commercial brokers aren't looking at all these different lenders and saying like, well, this person actually has a relationship with the vice president at this bank. They're just giving you the different menu of options from the different banks, and they don't actually even know who the borrower is. And so you may actually get a better deal with a local bank if you have a really long-standing relationship. And again, that's the piece that a loan broker may not be able to get you that better deal if you're able to secure a better deal with somebody, a local bank or a credit union where you do have that relationship.
Yeah, and we're going to talk more about just working with your local bank next. But question for you then, would you see some scenarios where you're not sure if you want to use a local bank or you want to use a broker, but you would go to your local bank where you have an established relationship, get some terms, and if they weren't ideal, then say, okay, and go to a broker? Or do you feel like you have to make that decision up front? If you have a local bank relationship, you can't go to the local bank first. You got to go just decide, hey, I'm going to work with a broker.
Well, I can tell you, having talked to the loan brokers, what they would say, and they would say, no, you should, choose one or the other path. You really shouldn't be doing both. And we've had situations where somebody went to a loan broker and then they went to a lender after they started working with a broker. And and it really created problems because the broker had already spoken to a contact in the bank where this person went and talked to the bank directly, and there were different people in the bank, but then the bank got really confused, and I think in the end, like the whole deal kind of blew up in their face. But I think that I think the general teaching is like, yeah, you should choose a path ahead of time. That's really best practice. If you really want to maintain relationships and not develop a bad reputation, choose one path. I remember one investor who had a really great relationship with a regional bank, and she and her husband kept going back over and over because they were getting increasingly good terms. Now the question is, had they gone to a loan broker, would they have gotten a better deal? I'm not sure, right? Maybe they were truly getting better deal with this regional bank, but maybe they could, if they'd shopped it out there, maybe they would have gotten a better deal somewhere else, or even with that regional bank. I'm not sure.
And you never know. That's the thing. You kind of never know once you've chosen a path how you could have done on the other path. So that can be one challenging thing. I also have to mention there are some community members we've had who have gone to one loan broker and then went to another loan broker. Also caused a whole lot of problems because then there were two brokers involved, and then you got to think about the fees and all the relationships that they've now accessed, and it can cause a lot of issues and really burn a lot of relationships that you cannot access them down the road. So be mindful of that. Now, one more thing before we talk about the local lenders, I do think it's important to also tell you guys that there is a little bit of a donut where it's more difficult to get commercial loans, which could also sway you one way versus another too. So, above $1 million of a loan, it's much easier. There are a lot of different options for you to be able to get banks who will loan it to you. With this smaller commercial loans, I remember when we bought a sixplex for $300,000, it's a little bit more challenging to get a commercial loan. And so that might be a time also that a commercial broker is really going to be somebody who can kind of help you out with finding that small commercial loan, because there's going to be a lot of shopping around that will need to be done. Now, you of course could do the shopping around yourself, right? You could spend hours and hours and hours, days and days, and shop 15 different banks. And try to talk to all the managers, and maybe you're going to get some of the deals, but certainly for time-wise and also because of those existing relationships, that might be a time where you also would say, hey, let me just choose a broker up front, knowing that it's going to be a little bit more difficult to secure that loan. So then let's talk about the other side. And we've talked about this kind of intermittently throughout this whole podcast, but let's talk about the benefits of going with a local lender. And by the way, a local lender can be local to the property or could be local to you. Okay, so for example, as former Washington residents, right, we had a really great relationship with one of our local community banks in Washington, and they were able to actually help us get loans in a number of other states because we were their clients, and so we were local to them, and so they could help us out even though the properties were in different states. So upside. Ease. I mean, you're going to one lender, you already have a relationship with them, they already know about you, they already have the pattern, you have some money in their bank, right? Because they want money in the bank to be, and you ideally have a relationship with somebody high up in the bank, ideally the president, right? And if they've done loans with you before, they knew who you are. Right? And they're able to kind of move the process through, and you can negotiate the terms directly with them. You don't have that middleman. It makes it much easier.
Yeah, that's true. I think that for sure there are some benefits to going local and straight to a bank who already knows you, right? They don't have to necessarily do all the extensive checks and things like that they might do if they don't know you at all. And they have things like your bank statements, so they may already have some of your paperwork. So that does make it easier for sure.
And they want to support you, right? You've got that relationship, and part of what local banks are for is to support local community members. And so you might actually be able to get a loan from a local bank that you couldn't even get if you didn't have relationships and you were just having a broker out there, because that relationship with that bank and them knowing that their mission is to serve their clients, you might actually get a loan that you wouldn't get, or you might get better terms, like we mentioned earlier, that you never would have had access to if you didn't already have a seasoned relationship.
Yeah, and I did want to bring up one point which you had brought up, which is like, local could be local to the property or local to where you are. And typically community banks will serve people in their community. So we're really talking about a bank that's local to where you live. And we have had that situation where a lender close to where we lived actually funded a deal that was out of state, right? And so it was, again, they were saying like, well, we're here to support you. And if you're investing out of state, we're going to support you, right? And that was kind of the idea. So I do think that it does make sense to build that relationship with a local lender ahead of time so that you can then go back to them and ask them, hey, can you help me with a loan on this commercial property?
And then finally, I think one more positive is repetition, right? The more loans you do with that bank, the better the terms can get, because now they have the depth of understanding of how you're going to show up. And so in our community, we've seen people get better and better and better loan terms, less down, for example, as they did more and more and more deals with that bank. And so just know that as you become a bigger and bigger customer with more loans, that allows you even more leverage to be able to go back and get better terms over time. And then what about some of the downsides?
Yeah, I think in terms of the downsides, probably the biggest one we already talked about is you're not going to have as many options. A loan broker is going to go out and find lots of options for you and compare and contrast. And as we talked about, there's so many different terms within a commercial loan. Something like a prepayment penalty, which we haven't talked about yet, could be something that could make or break a deal, right? The interest-only period. You might want the interest-only period, a longer interest-only period, and maybe the bank that you're working with just doesn't offer that or doesn't offer a very long one. And whereas, if you're a broker, you tell your broker, this is important to me, right? I want a long interest only period, then they can maybe go around and shop for that specific term. And so that's the reason why I think, it is, it's definitely, I could definitely see the downside of working just with one bank and putting kind of really all your eggs in one basket, like placing one bet and seeing what comes back. I personally, I think that that's a big downside of working with a local community bank.
And one of the upsides and also downsides is, you get to negotiate with them directly, which is a great thing, but also you have nobody else kind of looking over your shoulder and making sure your terms are great, right? And somebody who understands what else is going on in the market at that time, because they're doing lots and lots and lots of loans. And so you just have a moment in time where you're interacting with one banker and only seeing one term. And so you are at a disadvantage that way as well, where you don't have that advice. So what you see is there are upsides and downsides, right? And it's not necessarily a clear, like, always get a broker or always go directly to your local bank. You really have to weigh it for yourself. You have to say, hey, how important are the potential fees for me? How important is it to me to shop around in a lot of different places? Or do I have a local bank that I trust, that I've already done 5 deals with, and of course I'm going to do another deal with that person because they give me such great terms, and I'm an experienced lender now, experienced investor now, and so I feel really confident going in and negotiating on my own behalf and reading through the paperwork and understanding all the terms. And maybe I've done 15 loans before, and now I know what's possible. You have to decide, right? And it might actually change for you over time too. I know for us, some deals, especially in the beginning, we used a lot of brokers. Then we started using more of our local bank relationships. And even more recently, we did another refi and we went and we used a broker again because we wanted to see all the options out there. So just even within your own portfolio, you may make different decisions over time with different deals too. So that was our quick mini episode on loan brokers for commercial deals versus going directly to your local bank. If you learned a lot, you want to learn more about real estate investing, learn more about subjects like this, make sure you sign up for our Semi-Retired MD newsletter, Investor Insights, at our website, semiretiredmd.com. We'll see you next time.